Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Wednesday, April the 19th, 2017. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and then our main hypotheses for the day. We do create multiple hypotheses in order to have a plan in place for whatever the market throws at us. We do not try to predict the market. We try to have a plan in place for whatever the market shows us and who's in control, and then we use the plan that best adapts to that market. Nobody can predict the market, so if somebody is trying to tell you, run away really quick. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, and then we do live trading analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that see in Quantum Leap are for education purposes only. Hold on one second, okay? I'm just dealing with an issue with AMP, and they just responded to me. Sorry about that. Just had to deal with answering a response from AMP. So I got the disclaimer out of the way. So let's take a look right at our trade levels yesterday. Yesterday we were looking at an open auction in range for Hypo 1, and we were looking for a rotation up, and then between the 41 area to the 45 area where you're looking for responsive sellers to step in and rotate us down through to the trade level at the 37.50 and the midpoint, and then we were looking for a continuation down through and back down towards, and our main target below was the 27.50. We never got to the 27.50. We had a complete inside day yesterday, and we got down to that 30 and a quarter and just went sideways, chopping around our key line in the sand. We were not able to get below it and stay below the key line in the sand. And what do? We rotate back up into the middle distribution, where we spent most of the Globex session and basically went sideways into the close. So inside day, it was a doji day yesterday. Our open was 36.75 and we closed at 37.75. So we basically we had a 1-point move overall in the RTH session yesterday. Taking a look at the economic reports, the earnings this morning, Morgan Stanley was a beat, Bancorp was a beat, Abbott was a beat, BlackRock was a huge beat. Everything's coming out pretty. This should have come out now too. Genuine Parts. Everything was pretty strong on the earnings so far. Looking at after the market close, tonight we have American Express and Qualcomm, Kinder Morgan, eBay will be a big one. That's about the biggest ones that people will be paying attention to, and those come out just after the cash close. So keep an eye on that in the extended session for reaction. Taking a look at the news, we don't really have a lot of news today. The only real news that we've got is the crude inventories at 10:30 Eastern Time. We've got the Governor Council member Wilkins speaking at 1, and then we got Beige Book at 2 o'clock. So not a big scheduled news day today. Each morning I like to start my day with a simple candlestick chart. We were talking about this cup and handle yesterday, and I just wanted to comment on this because you have to understand that cup and handles, zipper measured moves. We had a zipper measured move with the primary target at 45 that was put in yesterday's afternoon. Cup and handle, these are not time sensitive patterns or measured moves. So this cup and handle has remained in place, okay, and valid because we never broke below the 35 level overnight, and we went up and hit our first target up at 44.75, and we're coming up to the secondary target up at 47. So just keep that in mind, and the extended target is all the way up here at 50.50. And 50.50, I'm going to show you in a minute, is going to be my new key line in the sand. I'm shifting it from 48.50 to 50.50, and I'll show you why when we get into that. Let me just get rid of these drawings so we can do what I always do every morning. Every morning I start with the same thing. I start with a simple candlestick chart on my paper money, and I have a 9 EMA, a 20 SMA, and a 50 SMA. And I only have the 50 on there because of the daily that we talked about in the last couple sessions, where we had finally had our first close below the daily 50 simple moving average. And then I use this account for my analysis, so I don't have to put lines on my IRT chart. But what I'm looking for is I'm looking for any chart patterns. I'm looking for the strength of the trend through slope and separation, where the trend is being challenged or violated. And I work my way from the monthly all the way down into the intraday, so that I have a good sense of where we are in the different time frames, and not get myself bottlenecked into a shorter time frame intraday. So monthly, we have a beautiful upward trend for multi-year at the end of 15, beginning of 16. They violated it. They took it back in 16, and then we got the continuation. We got this nice rising 3 pattern that we talked about when it was setting up for the continuation to put in a new all-time high. That happened. We hit the 24.01, adjusted to 23.98 in the June contract, but we still have good slope and separation. The trend is still very much intact in the monthly. It doesn't even get challenged until we get into the mid 2200s. Going to the weekly, whoops, not the daily, the weekly, you can see that we were having a very strong trend up, and we were one time framing up, and then we broke the one time framing. That was our first clue. We talked about that when it happened several weeks ago, and that was the first clue that we were going to get a counter rotation. And what do? We come down and close the technical gap that was created on the weekly. We broke below the 9 for the first time and closed below the 9 for the first time last week. But this week so far, we've opened up. Our week open was 23.24, and currently trading up at 44.75, and we're trying to hold and get back above the 9. So we can see a possible rally from here if we can hold above. I'm still watching that 32 area, but we have challenged the trend, and we've lost some slope and separation. So we're at a decision point or consolidation point that we have to watch carefully. We don't violate the trend until we get below the 23.1275, and that's a key CLVN on the composite. Going to the daily, on the daily you can see that what reason I put this 20 period simple moving, 50 period simple moving average is because that's a psychological level for many traders, and it's the first time since the election day that we closed below it, and we closed below it back on the 12th, which was Wednesday and Thursday of last week. And so far we've come up and we're challenging. We've got the 9, the 20, and the 50 all right here in around the 48 to 50 area. You can see that the 20 is up at 50.50. And quickly, I'm just going to show you that 50.50, whoops, that 50.50 coincides with, we have the CLVN here at 48.50, but there's another one right here at 50.50. So I'm moving my key line in the sand up from 48.50 because we've seen that we could chop around in that 48.50, and I'm moving it up to 50.50 because I've got the 20 period, the 50 period moving average up there to coincide with another CLVN. But we are showing some weakness in the daily, but this is turning into if I draw a trend line here, this is turning into a bit of I think it's a declining triangle. You can call it symmetrical. It's not really symmetrical, but we're at a consolidation point here, and we're going to either bounce back up into this balance or we're going to fail again. And I'm watching that 50-50 as where I'm looking for possible failure. Going to the intraday. You can see that on the intraday, we did have a strong trend down. Then they took it back 2 sessions ago in the RTH, created a technical gap, closed the technical gap, came down, saw the weakness, found the buyers. We have a higher low on the 4-hour, and then we get this rally that is continued from that low from yesterday, which was 30.25, and we're starting to get slope and separation, and we're challenging the 50 SMA on the 4-hour. So it looks like we've got the start of a trend up on the 4-hour, moving down to the 1-hour. You can see that is accelerating. Going to the 30-minute, you can see that it is accelerating, and we're getting good parallel price movement on against the 9. So this trend is pretty strong right now. And then going to the 15-minute, you can see the same thing. And then on the 5-minute, we've broken down and we've gotten first move below the 9 and the 20, and we're coming back and challenging from below. So as we move down in the time frames, things are still positive all the way. So I mean, don't get your bear hats on too much. Most of the time frames we still have a positive trend to the upside. Taking a look at the big picture, we have created another distribution zone of balance within the longer time frame balance. My longer time frame balance microcomposite runs from the gap up day on the 13th. Price acceptance is still above us. Then when we had the breakdown day, several Tuesdays ago, I started another microcomposite to see where that price acceptance is, and you can see that is above us as well at 53.50. And then when we came down here, I was running multiple. I had 2 profiles down here, 2 on this day, 2 on this day, but overall they've now consolidated and created a microcomposite VPOC for the last 5 days at the 38.50 area, 39 area. So we've created price acceptance here. The key is to hold this 39 area, 38 area, and then push through to the 50-50. And the reason I'm using 50-50 is that 50 moving average on the daily, but also you can see that the value area and the CLVN for the smaller time frame is right there. I want to see a clear break above that and get into this distribution zone, and to do that we got to get above the 50-day moving average and above the CLVN at 50-50. So key line in the sand above has moved from 48.50 to 50.50. Key line in the sand below is still going to remain down there at the 32.25. I might even move it down into 30.25 with the move. But you can see that yesterday we had a doji day. Okay, and a doji day, what does that mean? What creates a doji day? What creates a doji day is 2 opposing forces unable to take control in either direction. So we could see more of this, but I think today we could see a move up, and I'm looking for a move up into this distribution zone above here, if we can hold above this 39. So let's take a look at our overnight inventory. is pretty much net positive. We've held, we've accepted this price below between the 38 and the 39 area, and overnight we've moved up. So inventory is net long or net positive on the Globex. We've created a double distribution zone with the LVN right here at 42, just above our 41 and a quarter, over underline that we are using. 42 is going to be my new over underline today. Really going to be between 42.50 and 42. Overnight VPOC is 43, is not likely to shift. There's a lot of volume that went through there. We went up and peaked above the prior day high at 44.50, got as high as 46.50, and now we're coming back and testing the range high from the RTH session. We do have a naked VPOC here at 44.75. This has been taken out in the Globex, but it still remains a naked VPOC in the RTH session, and we're likely to take that out on the open at some point in time. Below the 42, the VPOC sat around the 41, but I'd really be looking for a move back towards that 39 area. So if we start moving our levels over, we have a overnight high at 46.50. And again, this could change. We still have lots of time left. We have an overnight low of 36 and a quarter. So basically 10 and a quarter points in the Globex session. 36 and a quarter. And we have this LVN at 42.50. And that just happens to be right at the value area high from yesterday. So that is going to be our over underline. Because we get back below it, if we get back below it, then we're inside a value and inside this middle distribution zone where the LVN, the open, the midpoint, and the value area low and the overnight low is all down here in the 37 and 36 areas. So I would be looking for with the naked VPOC, so I would be looking for an 80% destination trade and a trip through value, okay, down to test this whole distribution zone, and then we've got to hold this level here, for us to get the continuation up that we're looking for. So somewhere down here. The key line in the sand, I'm going to shift down to the 30 and a quarter. You can use the 32, what is it, 32, well, it's shifted to 28 on here, but you could use the 33 and a quarter like we were using yesterday, but I'm going to use the 30 because I want to take advantage of the break from yesterday to come down and take out that naked VPOC and the naked cross that we've got down there at the 27.50. Our 20-period daily full session is running at 20.46, so off of the overnight high of 46.50. Our daily downside target is shifted to 25.75. And off of the overnight low of 36 and a quarter, our upside daily ATR target shifts to 57. Our weekly ATRs does not change. Our weekly full session ATR is running at 35.86. All right. So we don't, our overnight Globex VPOC is at 43.50. All right, so I don't need this anymore, so let's get rid of this. Expand this out. So levels. We've got most of the important ones. I'm not going to put a level right here because of the fact that we've got so much going on right there. We've got the naked close, we've got the naked VPOC, we've got the range high from the prior day, we've got the overnight high, we've got just a ton of things. So this is going to be very convoluted and expecting to get a lot of chop in here. We are going to open just inside a range or just outside a range. We don't know which it's going to be. We still got 20 minutes to go before the RTH opens, so we could be opening out of range. So what are and then the levels don't really change above. Key line in the sand is going to shift up to the 50-50. And we've got the 53.50 target, and that's right there at the naked VPOC, so I don't have to do anything with that. And then we're back in this area right here, which basically is undetermined fair value between the 59.50, the 57, and 56 and 53 area. So just a lot of chop expected. You can see, look at the wicks that we've got there. That's just a lot of chop that can happen, and it's going to happen again when we get into that area. So let's take a look at our hypotheses. We're starting to one time frame up. So my main hypothesis for the day, hypo 1, is an open auction just out of range or just inside a range. A move down, test the value area, and that would be the first spot I'd be looking for a response, initiative buyer stepping in, but a possible rotation down into the 37, 36, 39 area, and looking for responsive buyers there to rotate us back up and back into balance and chop up here, okay, between the 53 area and the 57 area. So open auction just out of range or open auction just in range, a move down, okay, rotation down, and between 42 and 36 area, I'm looking for initiative buyers to step in and rotate us up into that former balance that we just fell out of. That's hypo 1. Hypo 2 is an open auction out of range or just in range or just on top of range, chop in this area, try to push up, fail to get above the 50-50, and then finding responsive sellers and rotating us back down towards the 38, chopping around in the value area, and then failing below the overnight low and pushing through down to test the 30 and the 27.50 area. Basically, just a little bit opposite. Our hypo 1s and our hypos 2s have basically flip-flopped, but again, I caution that both have about a 50-50 chance. Hypo 3 is going to be an open test drive or an open drive, and looking for failure to get inside of the VPOC and then push up very strong into the 53 area, chop around here, and then push up and come all the way up into the 60 area, okay, and back into this 59, chop there, and then possibly get their first move back towards that 63, 64 area where the sellers were stepping in the last time. That's hypo 3. Hypo 4 is an open auction failure, a failed breakout or failure to get and hold above the overnight high, a rotation down through value, chop around here, and then get a strong move, a trending day down, okay, and a move all the way down here into the 22 and 1975 and test the week low that we've got that was put in on the Sunday night. Remember that 22.75 is still a week low as in the week, and week low as in a double bottom that is not strong. So those are my main hypotheses. They don't really change much. I mean, we've been in this area for so long that these levels should be jumping out at you and screaming, you know, here I am, look at me. Taking a look at gold, we talked about this yesterday, that I felt that the $49.20 move was going to stall out and that we were likely creating some balance in around the 89. I took my my short off on GC last night at 89 because I felt that we could get a bounce because we had a pretty strong rotation down. Well, it went lower. So what am I going to do? But it was good thinking because we could have bounced off of that 89. We did bounce a little bit, but we've pushed through, and so far our low tested that 83 again and got us down to the 82.50. Nothing changes in gold. Our key level is going to be that 83 still below us, and above us the 94, and we could get another day of balance here. Below the 83, target this lower distribution right here down at the 78, 79 area, possibly even 75. If we break above the 94, look for them to go to test the 1300. I think they're balancing here and creating price acceptance for this next leg up to the 1300. I don't think they're going to get that close, to get within $2.60, of hitting 1300, and but they might, they might have suckered in the longs with that move, and they could punish them by taking them down. And I mean, it would be nothing on gold to come all the way back down into the composite VPOC, the most traded price, going all the way back to October the 9th, 2017, or 2008, I should say. So anyway, that's going to, I think we're going to see more chop in gold. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side. Sorry it took so long today.